One of these banks will tell you you can get $2,300 for being new to Canada.
And most newcomers will never see most of that money.
Not because they did something wrong, because nobody told them how to read the fine print.
So today, we are doing something that the banks won't. We are opening the fine print side by side, showing you exactly which offers are real cash and which ones are just a big number on a poster.
And stick around, because there's one number in this video that looks like is the best deal of all of them. But it's actually the one we tell our own family to be most careful about. And we will show you which one at the end. Hey, we're Pratik
And Choiti.
and this is 2 Cents Diaries, a channel where we share real life and money advice as newcomers in Canada.
We made a video on the best newcomer banking offers back in 2025. A bunch of you asked for the 2026 update. So here it is, fully refreshed with this year's offers.
By the end of this video, you will know which bank accounts to open and why, the 4 offers worth your time in 2026, and the 3 fine print traps that can quietly cancel out your bonus.
Before we dive in, just a heads up, we are not financial advisors. We are a couple sharing our own journey. This is educational, not financial advice. And these offers can change literally any day. So always confirm on the bank's own page before you sign up.
Let's start with the question most newcomers get wrong in week 1. When we landed, the advice online was everywhere. Use an online bank, it's free. No, go to a big bank. Here's what we actually believe now, after actually doing it. Start with one of the big 5 banks first. CIBC, Scotiabank, RBC, TD, BMO, just pick one. Not because their accounts are magically better, but because in your first months in Canada, you'd want to have the convenience of just walking to a physical branch and getting your stuff sorted. To verify documents, to deal with a wire transfer that got held, to get a real human when something breaks. And something obviously will. And the newcomer bonuses are actually good, if you treat them like the temporary deals they are. Here's the model we will follow in 2026. And then we will break down some of the newcomer offers. Step 1. Open an account with a Big 5 bank, grab the welcome bonus, and enjoy the no-fee period they offered the newcomers. Step 2. Once you're settled, move your day-to-day money to an online bank, where there are no fees, ever. And you can also chase high-interest savings promos to maximize your savings. But no-fee period is doing a lot of heavy lifting, because the very first offer has a clause that turns free into $50 a month. And the date it kicks in is hiding in a footnote.
Let's start with CIBC's Smart Account for Newcomers. The headline: bundle and earn up to $600 and no monthly fee for up to 24 months. Here's how that $600 actually splits. It's a $500 cash reward plus a separate $100 cash reward. The $500 is the realistic one. To get it, open the account. And within 60 days, set up one recurring direct deposit of at least $500 a month. That's your pay, a pension, or government deposit. And then do one of 3 small things in a month, like 5 debit purchases or 2 bill payments of $50 each. Sounds easy, right? Here's the catch most people miss. That direct deposit can't be a one-time thing to trigger the bonus. The fine print says it has to keep recurring and stay in effect for at least 1 year. Stop early and you can lose it. And the $500 doesn't even land in your account until up to 7 months after you open. I'll be honest, the first time I chased a bank bonus, I didn't read the timeline. I assumed it would show up the next month. It didn't. I actually messaged Pratik like, did we get scammed? We weren't. I just hadn't read that it takes months. So now I screenshot the timeline before I sign up for anything. And that extra $100, that one requires you to also apply for and get approved for a CIBC credit card. For a lot of newcomers building credit, that card is a great idea anyway. But notice, they bundled a second product into the headline number. Also buried in the terms, you have to be 25 or older and not have held a CIBC checking account in the last 5 years. One genuinely nice bonus here for the future investor in you. CIBC has been offering 100 free trades on Investor's Edge for newcomers. Hold that thought. We'll come back to investing. So, CIBC's $600 is actually $500 if you are 25 plus. And keep your pay flowing for a year. Now compare that to the bank advertising almost 4 times as much.
Scotiabank's Start Right program. The headline number, it's the biggest of the bunch. Up to $2,300 in value in your first year. Stop right there. See that word? Value, not cash. That one word changes everything. Let's actually take it apart because I find that genuinely fascinating. That $2,300 is 3 buckets added together. Bucket 1, about $580 in start right value. But look closer. That includes around $280 in savings on international wire transfers. That's only real if you otherwise send 7 international wire transfers a year at $40 each. If you don't, that $280 is zero. Bucket 2, up to $700 in checking and savings welcome offers. Now this has a real $500 cash piece. Open the account and do 2 qualifying transactions. The other $200, that needs you to open a savings account and a registered account too. Bucket 3, up to $1,080 tied to their Passport Visa Infinite credit card. Bonus points, lounge access, worth a few $100s on paper. And foreign fee transaction savings. That card has $150 annual fee, waived the first year for newcomers. And the points only show up if you spend thousands of dollars in your first few months. So out of the $2,300, the real easy cash is actually the $500, in the same ballpark as CIBC. The rest is value that you only unlock if you spend big and travel. And here's the trap that bites in month 13. The preferred package is free the first year as a newcomer. After that, you pay $16.95 a month, unless you keep a minimum balance of $4,000 sitting in the account at all times. $4,000 part, basically earning you nothing, just to waive the fees of an account. That right there is the reason why the step 2 of our plan exists. We didn't keep our money in the big 5 banks long term. We moved it. So the bank with the highest headline number gives you about the same money as the bank with the smallest. Funny how that works. Now, where should the money go after the bonus?
Okay, quick reset.
If a bank has ever made you feel dumb for not understanding their fine prints, do us one tiny favor and hit subscribe. That's it, no big speech. We make one of these every 2 weeks, and the algorithm thinks nobody likes us. Prove it wrong. And we have referral links for the banks we talked about in this video in the description box below. If you sign up, you get something and we get something as well. This genuinely helps the channel grow. Thank you.
Now the online banks. Once you've got your Big 5 account and grab the bonus, this is where your day-to-day money should move. Online banks. No branches, but also no monthly fees ever. Not for a year, ever. Tangerine first. Their no-fee checking account has a move your pay offer. Open it, switch your payroll over, and earn $250. The requirement is gentle. Deposit at least $200 a month for 2 consecutive months. And their savings promo for new clients has been sitting around 4.5% for 5 months on regular savings. Then Simplii, which is actually run by CIBC. So it's the online sister of a Big 5 bank. Simplii's no-fee checking offer is one of the most generous. $300 cash plus a $50 skip gift card. To get it, you set up a direct deposit of at least $100 a month for 3 straight months within 120 days of opening. New clients only.
Here it is, the number that looks like the best deal in the whole video, and the one we would tell our own family to be most careful about. The high interest savings promo rate. Simplii's been running a 4.6% promo rate for new clients. Tangerine has a similar offer too. Why be careful about a high rate? Because of 3 words in the fine print. For 5 months. At 4.6% is not your regular rate. It's your rate for about 153 days, about 5 months. After that, it quietly drops to the regular rate, which can be a fraction of that. The bank does not email you a reminder. Your money just starts earning less, and most people never notice until it's too late. This is actually a trap that looks like a gift. Now there's a smart way to play it. In our last video, I talked in detail about how we earned $718 from our Tangerine promo. So the same trick actually works for Simplii too. You move the money to wherever the fresh promo is. I'll link the video in the description box below. It works, but it's a set a calendar reminder game, not a set it and forget it game. If chasing promos sound exhausting, and honestly sometimes it is, there's a simpler path. There are banks like EQ, Neo that offer solid regular rates. So if you just want to set it and forget it for something like your emergency fund, you can use them. We made a whole video on the best high-interest savings accounts in Canada in 2026. That will be linked in the description box as well. But here's the bigger truth, and it is the most important thing we'll say in this video. Even the best savings rate is barely keeping up with the cost of living in Canada. Cash sitting in a savings account, it's safe, but it's not growing. In Canada, if you want your money to actually grow, at some point or another, you have to invest it. And that's the step most newcomers delay for years. So let's fix that.
So you have got your accounts, bonus collected, savings earning interest. The last piece, and the one that actually builds wealth, is investing. Canada gives newcomers some genuinely powerful tax-free and tax-advantaged accounts. The TFSA, where your growth is completely tax-free. The FHSA, if you are saving for your first home. And the RRSP, which can lower your taxable income. The catch is, the order you use them in actually matters. And it depends on your income. We made a full video on breaking down the differences between all these accounts and the exact order to use them based on what you earn. We will link it in the description below because it's too much to cram in here. And if the word investing makes your stomach drop, same, it did for us. If you are a total beginner, you don't need to pick stocks or understand charts. We made a video on getting started with investing through Wealthsimple. It's about as beginner-friendly as it gets in Canada. Start with $20 if that's what feels safe. The point isn't the amount. The point is that your money stops sitting idle. Let's bring it all together because there's a clean order to all of this.
So finally, here's the whole plan in one breath. Open with a Big 5 bank for branch access and welcome bonus. Move your everyday money to a no-fee online bank. Keep your savings earning interest. But be careful, watch that 5-month cliff. And whatever you don't need, invest it so that it actually grows.
And that number we warned you about, the 4.60% savings rate, it's not a scam. It's a genuinely good deal. We just want you to know that it expires. So you control your money instead of the fine print controlling it. That's the difference between a newcomer who feels behind and the one who feels in charge.
When we landed, we felt behind on all of this. Like everyone else got a manual that we didn't. The truth is, nobody gets the manual. You just read one fine print at a time. And one day you realize you are the friend other people ask. That's all this channel is. Us, a couple of steps ahead, turning around to way forward.
So your one next step, watch our 2026 Best High Interest Savings video. It picks up exactly where this one ends. And if this helped even a little, subscribe so that the next newcomer finds it too.
We're Pratik and Choiti. This is Two Cents Diaries. See you in the next one.